All right, what's going on, everybody? So today's video is about where I believe we are in the market, specifically related to crypto, and where I think the next 3 months or so are going to pan out in terms of market movement. So first, what I wanted to start off with is just looking at the metrics of this Levitas data dashboard. And what I see near term is definitely a lot of uncertainty in the markets, not only in the crypto makeup, but the equities makeup as well. Now, a lot of people talk about, how sentiment has been increasingly bearish. And, when you're at such low levels, bearish sentiment rarely ever pans out, this, that, and the other. And while I agree with that, when sentiment is very, very bad at, say, the lows, generally not a good thing to start getting really bearish or really short in the market. Okay, more often than not, the market will try to reverse on that bearishness and really surprise you in the next few weeks. Add to that the fact that, we've actually just been staying in this pretty large range, if you will, especially in the US equity space between 3,600 and the high of 4,200 right here. We're not really breaking through yet. Now, obviously, that could change this week, right? Maybe this week we get nuked because this week we had some interesting stuff pan out in the market. For example, the pound versus dollar, okay? This was a huge drop down, a huge spike down in relation of the pound to the dollar. The DXY in general as an index has been absolutely ripping for the last, say several weeks, and especially Friday and today, it had a pretty big spike up. So all these things taken into light, we can kind of see that the market itself is really tilted and on edge. However, the probabilities are decently high that, okay, maybe this is a bottom, right? Maybe this is a temporary bottom and this is a big range that we're developing. And the crypto perspective, maybe that's also the case, which is that this is probably a bigger range. Okay, it doesn't have to be exact, 17.5 low. Maybe this is the low right there. Maybe 18.2 or 18.5 is the range low. And maybe up here, somewhere up here around 22, 23 is the range high. Maybe all this stuff that happened up here is all, excess and a distribution. But this is the real range low, which you probably don't want to be shorting, and range high, which is around 23K or so, right? So in context of this, okay, I can kind of see that if you're bearish right at the lows, okay, fair enough. You don't really want to be too bearish or you don't want to be too aggressively short. However, I want to counter to that and just say that over the last 9 months or so that we've been in the market, remember, crazy things have happened and yet the market has still actually gone down. For example, I think when Russia invaded Ukraine, and I want to say that was like right here, or maybe it was like somewhere around here. I forget exactly where it was, but wherever it was, right? The point is that over the last several months, we've had increasingly bearish news, bearish sentiment, just negative headlines print across the board. And it's not that the negative headlines are coming without any justification. There is actually real world issues that are happening. For example, the UK is dealing with serious inflation, and they want to raise interest rates by possibly 75 or 100 basis points by November, right? Very similar to what the US did not too long ago. We actually raised our interest rates by 75 basis points just, earlier this month, right? Almost a week ago or 2 weeks ago. If you look at, say, a general question that you ask people around the country, quite possibly around the world, here in the US at least, inflation is almost the top ticket items of concern of most people. And Fed and the central banks around the world have been trying to solve inflation by hiking interest rates. And interest rates have almost a direct negative impact on risk assets like stocks and like crypto. So it's not like we can expect the central banks around the world to just start pivoting away from their positioning and just say, well, we have to, stop hiking interest rates because they're destroying the stock market. I don't really think that's actually the top of their concern. The top of their concern is what is the top of the US consumers' concern, or the top concern of most people in the UK or Europe or other parts of the world, which is inflation, right? Inflation has generally impacted 100% of people, and it has brought down economies and empires historically. So trust me, when it comes to markets or economies going into a recession, I believe that the central banks think that that's the least of their worries. Because if you think about going into a recession and destroying the consumer is bad, well, imagine having your entire government or central banking system or financial system being questioned, right? That could actually cause countries to go into chaos and anarchy, and that's not really something that the American government or the European or the UK government really want. So I believe top ticket items, solving inflation, which is therefore done by hiking interest rates, as you can see right there, as the US has done, as the UK is doing and continues to want to do. Okay, so these are how we are going to go about solving those measures. But then what does that do for crypto markets and stock markets? Well, like I said, it's effectively almost a negative correlation, right? Additionally, not only is it a negative correlation, if you actually look at this Merrill Lynch options volatility index, what it is showing you is volatility overall in equity markets, as well as the option space, is increasingly going up over the past 1 year. This just means that the market whipsaws a lot up and down because of so many headlines printing and so much uncertainty being baked into the market. Even if you look at crypto on a day-to-day basis or a month-to-month basis, if we go here, let me go to implied volatility. I just want to show you all one thing, okay? Let's go to year-to-date, and let's go over spreads year-to-date, okay? One thing that you'll see is, right, more often than not, crypto does not really stay quiet for very long, okay? What BTC and ETH are a direct reflection of is crypto sentiment, right? Crypto risk on or risk off nature. And when you see implied vols, having these spikes like this or staying elevated, right? Well, in general, crypto doesn't stay quiet, but when you start seeing spikes like this more often, over the past 1 year, that means that the markets themselves are much more choppy, much more up and down, wish-washy, that they're not able to hold a particular narrative or direction or momentum. And that just shows you that the market overall is in a very uncertain paradigm. And when you are in an uncertain paradigm, almost all positive news, especially in a down market, can lead markets up in a very violent way, but then it brings them back down violently too, because there are just as many sellers equally waiting for that pop up in the market, ready to short it down, ready to sell it down, because their number one concern that they're looking at is, first of all, volatility is very high, risk is very high because of what central banks are doing for inflation. Thus, to seek security and to seek hedge risk, right? What do they have to do? They probably have to sell down some of their assets. So all spikes in the market, especially in crypto, are probably seen as a spike to sell rather than a spike to buy. So in the current market conditions, what we can more often than not tell is that the market, whenever it shows aggressive weakness like this, especially for a prolonged period of time, yes, it could be a larger form of accumulation, but in the grand context of things, in the grand scheme of things, this is what our market has been doing over the last several months. And in fact, if I showed you, here's what it looks like on a total market cap perspective, well, this is where it is. Here's a June low in total market cap, which is around $760 billion. And here's where we are right now, $890 billion. Now, we could easily go back to the June lows, right? We could double bottom at the June lows. And, that would mean that from here, where we are, that's another, 13, 14% drop in total market cap, okay? Some alts might drop 20, 25, 30%. Maybe Bitcoin only drops 10%, right? In a price perspective, but on the total market cap perspective, the market cap overall of crypto can keep going down. And guess what? For the last several months, it has continuously gone down, right? This has not really been any indication to tell you that, okay, well, we're in an accumulation pattern, or there's strength to be seen, or capitulation style events have happened. It's possible, but it's way too early to tell. That's the point, okay? So how you want to prepare yourself is, I think, two ways, right? Number one, if you're a long-term buyer, let's just say, your time horizon is 1, 2, 4 years out, right? Well, you want to focus on good assets that you've done your research in. If you've done your research in Bitcoin, great. Then you want to be, possibly a buyer of Bitcoin at these levels. Because guess what? This is the previous all-time high level of BTC. Let me pull up a different chart and show you how contextually that looks. This is where, BTC is on a weekly basis. We're literally at the previous all-time high, which, by the way, has never been done, right? We've never gone back to retest the previous all-time high. Now, that could be seen as a good thing, which is, this is a once-in-a-lifetime opportunity. You get the perfect retest to buy. Or it could be seen as a bad thing, which is like, well, wait a second. If it's doing this for the first time in its life, is that really a good thing? Is it really supposed to retest its previous all-time high? And not only does it retest the previous all-time high, it has been sitting there for almost 3+ months at this zone right here. This is a previous all-time high. So the question is, if we're sitting inside the previous all-time high and we're rejecting it, I don't know. It's a question to ask oneself. Is that really a good thing? And is that where you want to be a buyer at? If you believe that 1 year, 2 years, 5 years from now, the price is going to be higher from today, well, then what does it matter? What does it matter if you buy at 19 or 15 or 13, right? I mean, if you're dollar cost averaging from today on the way down, and your expectation is BTC goes back to 60 or 70 or 100K, these are pretty good levels to average down. Same thing with Ethereum. If we look at Ethereum, it's almost, a very, very identically same chart, which is that the previous all-time high was $1,400. Currently at $1,300, we are kind of rejecting that $1,400 area, right? So we're sitting pretty comfortably inside the previous all-time high, but is that necessarily a good thing? I don't know, right? It doesn't necessarily mean that you want to be a buyer here just because this is what it's doing. But if you're thinking about dollar cost averaging on ETH, and you don't think that, ETH is going to go away anytime soon, and you want to be a buyer of ETH at, 1,300, but also 1,000, but also 700 and also 500, then these are decent levels to start cost averaging down. And again, this is not financial advice, but I'm just explaining to you that, context is everything, right? Time horizons are everything when it comes to how you want to go about the market for how long. Now, we spoke about the broader issues that are affecting our markets, right? And now, we kind of want to dig into a little bit of crypto itself. Well, on a smaller time horizon, here's kind of what crypto is doing, right? What I see is, number one, we have a pretty nice descending parallel channel, and this is on the log chart, right? If you change this up on the linear chart, this is kind of how it looks. Also still a descending parallel channel right here, right? But quite possibly, maybe we need one more drop right at this little, support trend line that we have going back to May and June and July 2021, which helped us find support right here in July 2022 as well. Who knows? Maybe we need one more drop into this area. And that might take us, by the way, if we drop into this area, around 15,000 and some change. Let me put a label on that and show you guys exactly how that looks, right? Somewhere in there. That's how that would look. On a linear chart basis, that's how that looks. Or this is a log chart, I'm sorry. This is how it looks on a log chart basis, right? On a log chart basis, you can see, there's a tap there, multiple taps at the lows right there. Who knows? Maybe we get down and tap one more time at the bottom of the channel or somewhere around here, 15 and some change, and then start our next leg up in October or November later this year. Okay, that remains to be seen. I'm not quite sure how the market wants to pan itself out. I feel a little bit more optimistic going into Q4, but I'm not going to deny, the last 9 months of what's happened in the market, and I'm definitely not going to deny, the reality of what the data as well as what the central banks are telling us, which is inflation is their number one issue. They don't mind hiking interest rates to the point where it really, chokes equity markets, chokes crypto markets, right? And they've been doing that pretty consistently by a pretty clear message, and that's been kind of wreaking havoc on our crypto markets, quite consistently, right? So the question there is, well, what are the tradable opportunities that you have now? Well, I think the tradable opportunity here is, well, if you believe that the market is oversold now, and you think that, hey, this is it, right? You don't believe that from here the market is going to break down. Well, then it's pretty easy for you to just say, well, okay, we've come into a key support area. Let's just say Ethereum, for example. This is previous resistance right here, all in July and June. This is a $1,200 pocket right here. Well, we've retested that, found support, higher low of support. Maybe from here we start breaking up. And if that's the case, well, from here the breakout should be, somewhere between, let's just say we did a fib from bottom to this low. Maybe we go back to the 50% fib, which is 1500, or 6.8% fib, which is 1575. Again, I'm talking about local movement, right? So this could be like this, and then maybe breaks down further, headed into October or November, right? That could be the trade to play. But remember that markets, again, every time we've gotten a spike up in the markets, we've had a pretty sharp sell down just because the macro around us has been pretty bad. Now, I want to show you guys, 2 or 3 different assets that have been doing much better than the rest of the market. And by that, I mean much better than Bitcoin and ETH. Number one, Atom. Atom we've been talking about for a while because guess what? Momentum-wise, Atom is probably one of the strongest assets that I've found in the market thus far. Clear uptrend, okay? 20 and 40 EMAs clearly pointing up. Really no momentum loss, because if you look at this trend line, look at these moving averages, price is very nicely holding up above these levels. Okay, that's number one. So that's a pretty strong trending asset. Number two, this is, XRP. I'm not the biggest fan, but again, there's some news regarding the, SEC case that XRP has against it, that it may actually win the case, in that the SEC may not charge XRP or, make XRP dissolve its token or whatever they're going to do, right? So XRP, again, broke out over the last, week or so. And now it's just sitting at the highs around 47 or 50 cents. Now you could make the argument, well, this is previous resistance, right? Like all it really did was smack right into resistance, previous support, previous resistance, support, breaks through, and resistance again. So it's not like it did anything special. Unless it smashes right up through this level, then you could start talking about maybe a new uptrend. But until then, the range is resistance, support. So the range play here is, like this. And so if you're already here, then the opportunity here is to get short, take this trade down to mid-range or range low. And then if you find that, markets have come bottomed here again, then this is where you get long again and take this into, mid-range and then range high. Okay, again, non-investment advice, but that's how I would look at it. The other asset, which I believe is kind of overlooked, is Compound. Now, again, Compound is the one asset in March, or I think maybe it was like April or May 2020, that Compound actually started beginning to bring out, DeFi out of its bear market. Compound was one of the leaders. I remember this distinctly. I guess it was like more like, let me see. I forgot what exchange it was trading on, but it was definitely like, April or May, June, 2020. But here, Compound definitely shows like a downtrend headed into November 2020. But then again, it began its next leg up, right? From November onward, Compound, Aave, these were like the big leaders 2 years ago. This time around, again, if you look at the structural basis of Compound, this is a June low, pretty decent size looking flag right here. This is a pretty nice looking flag, right? Ascending channel flag, whatever you want to call it. That looks pretty nice here for me, in terms of compound. So if this starts to push up and break out, well, the compound has got a pretty decent way to go. And I would say compound gets back towards this trend line right here. Okay. Let me show you guys. Let's go back to that chart. I just want to pull out this trend line on a weekly basis, because I believe that's an important trend line. Let me see here. So from here, compound, going back to its original trend line right here, could be about 147% gain. Now that's a pretty solid move if compound begins its uptrend from here. All right, so compound, XRP, Atom. These are three assets that you definitely want to be paying attention to, in context of the market right now. Now here's, let's check out real quick as the US equity markets are open. Here's how US equities look. Okay, this is the open right now, right? This is the open right now, the current candle. Not too bad of an open, right? What does BTC do so far? BTC also had a very nice spike up. So now what we want to see is Bitcoin continue higher and trend higher with the S&P 500. Now the S&P 500, if it starts breaking down, it could very easily drag BTC down with it. And in which case, right, once again, keep an eye, wrong chart. Once again, keep an eye on this area right here. Okay, first of all, we have the weekly open, which is 18,800, but also this range low around 18,500 to be the next level of support. Worst case scenario, maybe we go spike into 17,500 and then we pop up, I don't know, maybe this week or next week or something. That's worst case scenario, right? Obviously things could get really bad, and who knows, maybe equities really take a shit and BTC starts going down towards 16 or 15 or 14 or whatever. But I'm not seeing that as a case right now. You can actually see right here, we're trying to break out of this descending trend line. But let's see how that stuff pans out for the rest of today. Okay. Other than that, we have two very unique articles that you may want to start doing research on. In June, we wrote up this article regarding NFTs in the music industry. It's on our Substack, alphatrades.substack. And then we also wrote up an article in September regarding crypto insurance. Okay, I think you guys will like this article a lot as well. So aside from looking at the markets, just price action wise, pay attention to other aspects of the crypto markets. What exactly is happening in the music NFT space. Even if you don't like it a whole lot, just start doing research, because this is the time to do research. This is a time to start putting your mind to work in terms of what may come ahead. Not what is happening today, but what may be happening next month or next year. Crypto is all about narratives and new theses, right? If you can find the next narrative and the next thesis, you will probably be ahead of the curve. Okay, that's it. That's all I got, everybody. I think, there's not really a whole lot else I want to talk about, but if you want to join our community, there is a link at the bottom of the YouTube description. You can join our Discord community right here. Come hang out with us. This is where I post analysis on a day-to-day basis, hourly basis. Our membership costs $97 per month. For $97 per month, you get 2 videos a day, live trading challenges, live analysis, live price action that I'm looking at in terms of different assets, and live updates on the market. All right, y'all take care. Good luck, and we'll talk soon. Cheers.